Welcome to the Riskwiser Zone. I'm your host, Lewis, and we're glad you're joining us today. As we dive into the world of stocks and finance, we've got a trio of intriguing stories to share with you. But first, let's take a look at what's been making headlines in the business sphere. We start with a story from Australia, where Treasurer Jim Chalmers has taken a rare step by suing a foreign investor for allegedly breaching the country's foreign investment laws. The investor in question, Indian Ocean International Shipping and Service Company Limited, was ordered to sell its stake in Northern Minerals, a rare earths mining company, over a year ago due to concerns about national security risks. However, it appears that the investor has failed to comply with this order, prompting the treasurer to take legal action. This development highlights the growing scrutiny of foreign investment in critical minerals and metals, particularly those linked to Chinese interests. As Western nations seek to reduce their dependence on China for these essential resources, we can expect to see more instances of governments intervening to protect their national security and economic interests. Meanwhile, in other news, Palantir, a well-known data analytics company, has announced a significant partnership with a nuclear energy startup. The $100 million deal aims to streamline the construction process for new nuclear power plants by digitizing paperwork and improving supply chain management. This collaboration could have far-reaching implications for the nuclear industry, which has faced numerous challenges in recent years, including regulatory hurdles and public perception issues. Lastly, we take a brief look at a story from Canada, where Axis Minerals, a company involved in a rare earths project, has been making headlines. However, our main focus today will be on the Australian rare earths miner and the Palantir deal, as these stories have significant implications for the global economy and the future of critical minerals. We'll be exploring these topics in more depth throughout the show, examining the potential risks and opportunities that arise from these developments. So, stay tuned for insightful analysis and expert opinions on the Riskwiser Zone. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're glad you're still with us as we dive into the world of finance and risk management. In this segment, we'll be discussing the latest developments in the market and how they might impact your investments. We have two interesting stories to share with you today. First, let's talk about the Indian stock market, which has been on a roll lately. The NSE Nifty rose 304.25 points or 1.2% to close at 25,549, while the BSE Sensex rose 1,000.36 points or 1.2% to end the day at 83,755.87. This marks the highest closing levels of both indices since last October. But what's driving this rally? According to experts, it's a combination of factors, including easing tensions in West Asia, falling crude prices, and sustained domestic institutional buying. The Bank Nifty index ended at record levels, with bank stocks leading the charge. However, not everyone is convinced that this rally will continue. Some analysts are warning about pressure on corporate profits and frothy share valuations. They recommend caution and sticking to large-cap stocks, particularly in the banking, life insurance, and cement sector. Meanwhile, foreign portfolio investors have been net buyers of shares worth Rs 12,594 crore on Thursday, while domestic institutions were sellers to the tune of Rs 195 crore. This trend is expected to continue with steady liquidity and flows driving gains in the market. In another development, we're seeing a shift in investor sentiment towards life insurance stocks. The Nifty's Volatility Index, or VIX, has fallen 2.9% to 12.6 levels, signaling that traders see lesser risks in the near term. This could be an opportunity for investors to diversify their portfolios and take advantage of the current momentum. And finally, let's touch on a related story about life insurance companies seeking to invest in the stock market. Some of these companies are looking to diversify their investments and tap into the potential of the equity market. However, this move also comes with its own set of risks, and investors need to be aware of the potential pitfalls. That's all for now. We'll continue to monitor these developments and bring you updates as more information becomes available. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've got a thrilling closing segment for you today, folks. As we dive into the world of politics and finance, it's essential to stay informed and adapt to the ever-changing landscape. Today, we're going to explore the recent developments in the New York City mayoral race. It seems like the Big Apple is buzzing with excitement as Zohran Mamdani, a self-described democratic socialist, has taken the lead in the Democratic primary. This unexpected turn of events has sent shockwaves through the business community and beyond. As we saw earlier this week, prominent figures like Bill Ackman have expressed concerns about Mamdani's policies, calling them economically unviable. Now let's take a step back and look at the bigger picture. The incumbent mayor, Eric Adams, has launched his re-election bid as an independent, following the primary upset. This move is sure to shake things up in the general election. As Adams himself said, this election is a choice between a candidate with a blue collar and one with a silver spoon. It's clear that both sides are gearing up for a fierce battle. Meanwhile, Andrew Cuomo, the former New York governor, is likely to drop out of the mayoral race after his primary defeat. Sources close to him suggest that his donors are questioning whether to support another candidate instead. This development could significantly impact the dynamics of the general election. As investors and risk managers, it's crucial to stay vigilant and consider how these events might affect your portfolios. The intersection of politics and finance is always complex, and we must be prepared for any eventuality. Remember, in times of uncertainty, diversification is key. In conclusion, the New York City mayoral race is heating up, and its outcome could have far-reaching consequences for the city's economy and beyond. As we navigate these uncharted waters, it's essential to remain informed, adaptable, and cautious. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, keep your finances in check.